Hey, welcome back to Two Stupid Guys Trade Stocks. I am Dylan.
And I'm Vinny. And holy shit, Meta rose from the ashes like a goddamn phoenix this week. We're going to talk about the stock news. We're going to talk about the quarter and what the quarterly report, what he talked about in the conference call. Give you a little bit of rundown about Meta stock, why it moved.
Two Stupid Guys Trade Stocks.
Oh
What
boy.
do you think? Is Zuckerberg the official king of Wall Street this week? Maybe. Maybe.
So I should say this. I made a huge mistake, big mistake. Probably not. I mean, not football bad, but um, I I really think that we're still going short. I don't like all the buying that's happening. It doesn't really make sense with all the economic data coming out. I sold Meta 5 minutes before earnings at 153. I'm so depressed. Damn it.
That hurts a little bit, man. It does happen. There's a reason why we named this channel this. Remember, I had my shares called away. I bought back in, fortunately, so I'm still holding Meta stock. Unfortunately, my all time favorite position is gone though. But this is the thing that I warmed the cockles of my heart, if you will. This quote from Zuckerberg about 2023 being the year of efficiency. You know, what do you think about that?
Okay. I'm still trying to get over the fact that you just said cockles, to be honest.
Cockles, yeah, yeah. It's just chordae tendini, if you will, if anyone out there is a medicine and gets that joke. It's
Jesus.
heartstrings. That's the real name. All right. But as you probably remember, if you've been on this channel for a little while, we did this video a while back talking about how Michael Burry said, Meta had a new Coke problem, and now they've kind of they dealt with that. They're going back to the classic Coke formula. Okay, the classic Coke has come out, and the stock was up massively this week.
Okay, but the big news is the buybacks. That's why they went up. Their numbers weren't super impressive.
It's not the buybacks. It's the thought process.
Hmm.
That's what people care about.
Okay.
All right, it's the story, if you will. So this is that after hours gap. This right here, this little kind of red candlestick. That's where Dylan was selling his shares. Okay,
Yep.
and then this. Sorry, man, it happens to all of us.
Yep.
This is why we named this channel this. But don't get too worried. I mean, if you look at a 1 year chart, look at this, right? We're still back to where we were in the summertime. That's literally how bad it was for Meta stock for a period of time. Sadly, my shares that I have bought down here below 90 got called away.
Yeah.
So disappointed in that.
I will say, even with the good news, with the way the market is, for people who are trying to get in, I do think there's a chance that we have a really rough summer this year. Like, not Meta, just all stocks
Yeah. All right. Yeah, we're going to do some video about it this weekend, but that is definitely
tomorrow.
something that's on our minds. So these are the kind of headlines you saw after the report of earnings, right? Up 20%, ridiculous, right?
Bro,
The
more than
company.
20%.
Well, yeah, exactly. And then it was actually positive like the day after for a little while, at least too. Market ended down on Friday a little bit, but the kind of positive things we saw as far as trends within the company itself, this really hasn't changed, right? They're still growing actual people that are using their products, which is ridiculous.
Yeah.
Do you nothing that's absurd? Because I do.
Yeah, well, I mean, we're running out of people on Earth.
Yeah,
So there's gonna be a problem.
yeah. They're gonna have to start sponsoring, SpaceX going to Mars. Otherwise, they're not going to have enough creatures to continue to grow.
Yeah, their growth
And
is gross. It's disgusting.
it it is exactly their market saturation is pretty ridiculous, but yes, somehow they're still adding users. But the thing that I think people underappreciate this is a breakdown of those kind of users across global categories here. And if you look at where the growth is coming from here, look Asia Pacific, particularly India is like their major market because they're not allowed to operate in China, right?
Right.
You know, how important is Meta, Facebook to actual India, which is honestly the economy in the world that I'm the most excited about as far as future growth prospects, personally.
Well, they got. Doesn't India have around? I hope I'm not wrong because this is live. Like 1.1 billion people ish.
I think it's higher than that. I want to say it's like 1.3. It's
I'm
it's
gonna look at
closer
it.
to China than you
I'm
would think.
close.
Yeah. This is the free cash flow. This has been the part that's been most worrying to me as someone that likes to look at the numbers of the business, right? Definitely a downward trend. Actually got down to the point where they were almost basically flat last quarter. This quarter popped back up to this $5 billion of free cash flow. All right. They did announce that $40 billion addition to their share repurchase program, but they're still making less than that basically per quarter in terms of free cash flow. So
Just so you know, India's 1.4 billion, almost the equivalent of China. It's like right there.
yeah, nice. I love it. So these are that kind of like more highlights, I guess, if you will, of some of the numbers. This trend is kind of continued. Ad impressions, the number of them actually happening, still going up. The price per ad still going down. Revenue, roughly flat. They talk about 4% decrease for the quarter, 1% year over year. But then if you adjust it to a constant currency basis, don't forget King dollar is still pretty high globally as far as like its all-time global, kind of currency
Yes, it
value.
is.
It would have been a 2 to 4% growth. This is nowhere near the classic, Meta revenue growth of 20, 30%. They have brought down their, kind of growth rate a little bit of their expenses, but their expenses were growing at a pretty astronomical pace, at 22% for the quarter, 23% for the year in terms of expense growth. Pretty ridiculous, right?
Yeah, no, that's disgusting. I agree. That's pretty good. And they just fired a lot of people. Was it 11,000 something?
11,000.
Yeah.
Yeah, so I'm gonna talk about that here in a minute too. The head count. It's actually right down here. Share repurchases. The most recent quarter is almost $7 billion in share repurchases. Total year, I think it was $27 billion. They still had almost $11 billion in authorized repurchases left. They added another $40 billion. Now, I looked, but I couldn't find kind of a sunset for that, a timeline by which they have to use this $40 billion. So I'm not really sure over what time period they intend to do this. All right.
Yeah, okay. So that's important because if it's over
Mhm.
3, 4 years, that's really good. If it's over 10, that's terrible.
I think it's probably going to be even less than 3 or 4 years. Sorry,
Well, that's pretty good.
actually put it that way. Yeah, and as of right now, as a market close, that represents about 8% of their market cap.
Yeah.
All right.
Well,
Yeah, pretty solid.
depends on when you take that market cap number in one day. It was 180 to
Yeah,
150. It's crazy.
yeah. I that was using about a little under $500 billion market cap as of market close on February 3rd, 2023.
Crazy.
Right? Then they did have $40 billion in cash, right? So that's money that can use towards this share repurchase program, in addition to their continuing ongoing, positive free cash flow, right? Yeah.
Head count. Oh, there's a head count. My bad. Sorry, I was reading.
Yeah, exactly. No, that's all good. So their headcount was, just over 86,000 employees, 20% year over year increase. They did say that this includes almost all of the 11,000 employees that they have announced that they'll be letting go.
Okay, so the 86,000 includes the 11,000, so they really have 75,000.
Approximately,
Okay.
because they're required to keep them on as active employees for a certain period of time after their kind of severance is announced. And they said by the end of this quarter, that we're currently in Q1 2023, that the headcount will actually be adjusted for that.
Okay.
None of these people
All
will
right.
be
I mean,
on
that
there
should
anymore.
definitely decrease the expenses there
Yeah.
by a
So
lot.
yeah, I love that point you just made, because Meta was so goddamn nice that they actually put the numbers out here for us and showed us how much of an impact that will have.
Ooh, that's kind of cool.
Yeah. So literally, it wasn't just the headcount reduction, but they're also fewer people, need less office space. They also are doing a new infrastructure for their data centers, which I think will be more cost effective, allow greater flexibility over time. They've transitioned to more GPU based rather than CPU based stuff for their AI engines, right? So their cost cuttings, they said, would have been about another dollar per share in earnings this past quarter. $1.24. It's right down here.
Wow. That's
Yeah.
okay. That's a shit ton.
Yep.
That's a lot.
Yeah. Another $4 billion almost.
Yep. Okay. My cell's
Okay.
looking terrible. Not feeling awesome about it.
Well, do you see what I'm saying about the year of efficiency and how there's a lot of stuff here legitimately get excited? I was excited in my last video, okay, about Metastock, and like the thing I'm gonna hate most about this is not buying more when I saw it at $90 a share. Okay.
Yeah. Oh, I mean, I was thinking I got greedy. I was thinking I had a buy order at 77. Idiot. Or
Yeah,
whatever it was.
I hear you. All right. So in the conference call, they gave us some kind of highlights about some of the things that are going on with the Meta. We talked a little bit more about it, like I said in the previous video. But Reels plays have doubled, up 100% in the last 12 months. the number of them being shared, of which I am personally responsible for like 10,000 of those. Ask Dylan every time he logs into Instagram, he sees probably a dozen for me. Okay.
It's very true.
Uh, yeah. They've doubled in the last 6 months, the number of shares.
Okay. Do you think that has anything to do with Snapchat imploding?
That's a thought. I wanted to listen to Snapchat's earnings. I have not had a chance yet, just
Well,
to
if you
get a little
just
bit more
look at
color
their
on this.
stock price, it's not good.
Wow, that's the Snapchat way. Okay, you report earnings and you tank 20%. That's what they do.
So they're
um,
at $10.
so
They were at 80.
yeah, so AI has improved the conversion rate 20%. Like, what do you think that means? Like, what does that mean to you?
I have no idea.
Okay, I'm glad you said that. Conversion rate is basically how many people are you turning into a sale based upon your targeted ad. So their AI engine has gotten good enough over the last 12 months that it's
20% is
converting
massive.
20% more impressions to sales.
Yeah, no, that's a disgusting number.
Yeah,
This is depressing.
exactly. We talked about the share buyback. Good. I love. They said added another 40 billion, which in total, if they used the 10 billion they had previously authorized plus the new 40, that's about 10% of their outstanding shares. Now they are issuing still stock-based comp at about $3 billion per quarter. So it's not all roses there. Okay, they are still a technology company which pays a fair amount of stock-based comp.
Right.
All right. On the actual earnings report, the COO, I forget his name actually, chimed in with a little bit more data about the effectiveness of their new AI kind of Reels engine, basically, if you will. And I can't remember the name of the company. It was a German fashion house. But he talked about how 40% of their advertisers are now using Reels, and they've lowered the cost per purchase 89%, and they've had a 9x lift in sales from using their AI-driven Reels platform.
I'm trying to find the company. Is it Leachy? Lenny?
He has a kind of an accent that I couldn't quite understand what he was saying.
Got it. Okay. I mean, that's
Um,
that's pretty disgusting. That's extremely effective.
so this is a little scary. This came from Mark Zuckerberg here, but he talked about how the AI content is going to be 30 to 40% probably of your feed by the end of the year is what they think. That was his estimation. Interesting, no?
Yeah. I
Yeah.
I really would like a I mean they'll never do it because it's proprietary information and they'd be stupid to, but I'd
Hmm.
really like to know how that works. Cuz like ChatGPT or whatever is out and I've used it a couple times. It's terrible for me. It's just the worst. So,
Yeah. And they're saying by the end of this year, they think by the end of 2023, beginning of 2024, like first quarter, they think that Reels will no longer be a headwind in terms of revenue, that it'll be neutral. Yes, more eyes are going there, but in terms of cannibalizing higher kind of revenue generating sources, it'll be neutral by the end of this year, is what their expectation is based on current trend.
okay, does that take into account that traditionally if there's a caveat. If there is an economic downturn, advertiser dollars are the first one to take a hit, right? So
Yes.
we could be one quarter away of a really shitty economic downturn, which would make all this good news put off a year.
Yeah. Hey, you know what though? I don't honestly care, especially you and I, where we don't have the entire desired position of meta stock at this point in time. That would maybe give us a great buying opportunity again, which
Oh
would be
no,
awesome.
for sure. I want to drop. I had 20K set aside for this, and I big mistake.
Yeah, it happens. So what you're seeing here is Meta total shares outstanding. This is not updated as the most recent quarter, but we are starting to build a consistent downtrend in terms of the number of shares outstanding, especially with this new addition of another $40 billion worth of ammunition to go out and buy shares, which is a great thing to see. You're owning more and more of the company. They're reinvesting basically in themselves and in a tax efficient manner, which is awesome.
Let me move my face. Let's see what you're
Yeah.
doing here. Jesus.
So this is kind of an interesting point. What I'm looking at here is this is quarterly revenue, and then ultimately at the bottom here, operating margin. So how much of that revenue are they able to turn into basically profit? And if you look at that trend, it's pretty disgusting, right? It's gone down significantly from mid 40% down to 20% in the most recent quarter.
Oh, it's very good.
However, what's that?
No, it's very
No,
good. Yeah, plus
no,
13% efficiency is gross.
yeah, exactly. That's what the cost reductions they've already put in place. if they are able to find additional cost reductions, you're talking about, bringing the margin even higher. That would take it back to like the mid 30% somewhere in that ballpark range, which is awesome.
Jeez, man. This
Yeah.
is so depressing.
They gave a little bit of guidance here. Now, the guidance, they gave revenue top line guidance basically for first quarter of 2023. And they also talked about full year expenses and capex. You're looking at full year expenses, this is 89 to 95 billion. They brought that down about $5 billion from their previous guidance. It was like 95 to 100 billion. Same thing with their capex, 30 to 33, that came down a few $1 billion from the previous guidance based upon this new data center infrastructure plan, mostly they said. So it's about a little under $31 billion a quarter. And they're talking between their expenses and then their capex. And capex is reinvesting. But you are still looking at a company that's looking at probably a negative free cash flow, if you're looking at it from that basis, over the next, period of time, if you will. At least the first quarter, it kind of looks like that way.
Wait, you'd only do 1 quarter of negative cash flow?
No, I'm just saying based upon the revenue guidance that they gave here, and if you just simply divide out the expenses for the full year on a quarterly basis, and same thing with the capex,
All right.
looking at spending about $31 billion in a quarter where they have like $28 billion in revenue.
Well, since this is obviously mostly 95% great news, let's just do a hypothetical situation. You have $15,000 that you want to throw in on Meta, okay?
Yeah.
Now, you had never heard the statement, timing the market is a terrible idea, okay? So that's the caveat. Just erase it from your brain, all right? Would you invest that 15, and you can only put it in Meta. Would you put it now, or would you possibly wait 6 to 9 months, hoping that you can get in at, like, I don't know, something crazy? What's the price
Yeah.
where you just throw it in right away?
Oh, I mean, this I don't think we're at throw it in right now price. That's
Okay.
my personal
What's
position.
throw it in price?
Ooh, I mean,
I
sub
know.
$100 a year again is that I feel almost like I'm dreaming right now. But the problem is this market has been so volatile over the last like 12 months that your dream price of today may be tomorrow's price.
Okay. All right. So it hits 120. You don't go all in?
120 is getting very much the tempting territory. I'd have to do a little bit more money, more work kind of on this. But if you
No
are
more
looking at a
work. You're on the
company,
spot. No math.
I know, but I'm just going to tell you some of the way I think about it here. If you're looking at a company they're headed back towards earning probably $10 billion per quarter in free cash flow, say $40 billion a year, trading at a market cap of $480 billion, that's about a 12x on free cash flow. So you're talking, what's that, 4 or 5% yield, which is about what you're looking at in terms of money market account right now. It would have to be probably a little higher than that to justify the increased risk of owning an individual equity. So I would say that on that basis, if I were to get down to 120 share is probably what, like $400 billion market cap. Now you're talking about, I'm trying to do the math really quick here in my head, but you're looking at a substantial like uplift in terms of what your free cash flow return would be at that point, right?
Yeah.
I'm trying to think what the number would actually be. So 40 to 10, we're looking closer to 10%. Yeah. So like 120 share, I think at 10%, that's a yes for me. Yes for me, dog.
All right. So I'm going to wait till 120. Vinny said it will happen and that he guaranteed it. You all heard it. So,
Totally.
yeah, take that to the bank.
Although we're
Huh?
options addicts here, but so maybe you can sell the 120 put. I don't know.
Yeah, I'm having some bad luck with options. We're going to do a video tomorrow on the insanity of this market right now and how it doesn't make any sense. Until then, thanks a lot, guys.
Catch you the next one.